Did you know the US dollar's dominance could collapse overnight if it lost its petrodollar advantage? Most people don't realize just how dependent the American economy and your financial future is on this hidden agreement. Stick around, because by the end of this video, you'll understand exactly why losing the petrodollar could mean skyrocketing inflation, a weaker dollar, and a dramatic shift in global power. The petrodollar system, established back in the 1970s, isn't something you'll find printed on your money, but it's the invisible force holding the US economy at the top of the food chain. Simply put, it's an arrangement where countries around the world must purchase oil using US dollars. Every barrel of oil traded globally reinforces the strength and demand for the dollar. It's the secret sauce that allows the US to finance massive debts without spiraling into crisis. But here's where things get scary. This arrangement isn't set in stone. Major players like Saudi Arabia, Russia, and China have already begun exploring ways to bypass the dollar. If countries stop using the dollar for oil, the demand for US currency would plummet, dramatically weakening its value. Imagine waking up tomorrow and discovering your savings have suddenly lost half their buying power. Groceries, fuel, mortgages, all becoming rapidly unaffordable overnight. And it's not just inflation you'd need to worry about. Losing the petrodollar would ripple through financial markets, causing turmoil far beyond the US. Stocks would tumble as uncertainty reigns, retirement accounts could take massive hits, and interest rates might soar as the government struggles to stabilize the economy. But how close are we really to this nightmare scenario becoming a reality? Stay tuned, because in just a moment, we're going to break down exactly how fragile the petrodollar system truly is, and reveal who could replace the US as the world's next financial superpower. To understand how dangerous this shift could be, we need to take a closer look at how the petrodollar system came to be, and why it's so deeply woven into America's economic dominance. In 1973, after the US left the gold standard, the dollar was at risk of losing its global influence. To prevent that, the US struck a deal with Saudi Arabia. In exchange for military protection and weapons, the Saudis agreed to sell oil exclusively in US dollars. Over time, every major oil-producing country followed suit. The result? A global addiction to the dollar, not because it was backed by gold or assets, but because it was the only currency you could use to buy oil. This meant that every country on Earth had to hold large reserves of dollars just to keep their economies running. That created a constant, artificial demand for the dollar, and allowed the US to print money, take on debt, and fund its global ambitions without the usual economic consequences. In essence, America exported inflation to the rest of the world. But today, cracks are forming in that foundation. China, the world's second-largest economy, is aggressively pushing for oil deals priced in yuan. Russia is already trading energy with its allies in rubles. Even Saudi Arabia, once the bedrock of the petrodollar, has signaled a growing interest in diversifying away from dollar-only trades. These aren't random events, they're strategic moves to weaken America's grip on global finance. Now, here's where it gets even more concerning. If these nations successfully shift global energy trade away from the dollar, it could trigger a chain reaction. Central banks might dump their US dollar reserves in favor of alternative currencies or gold. Countries could stop buying US debt, forcing interest rates to spike just to attract foreign investors. And with higher interest rates, the US government, already $34 trillion in debt, would find it much harder to keep up with payments. The result? A potential debt crisis that shakes not just Wall Street, but Main Street too. Most people have no idea how much their daily lives depend on this system. If you're in the US, your rent, your groceries, even your job are all indirectly supported by the dollar's dominance. That dominance isn't just about pride, it's about stability. Take it away and everything becomes more fragile. But here's the twist. This scenario isn't just a risk for the US. If the petrodollar falls, it could mark the beginning of a new world order, where a different nation or bloc sets the rules of trade, controls the global currency, and reaps the financial benefits. In the final part of this video, we'll explore who's most likely to take that crown and what smart investors can do to protect themselves before the storm hits. The question on everyone's mind is, if the US loses its petrodollar privilege, who stands to gain the most? All signs point to China. Over the past decade, China has been quietly building the foundation for a post-dollar world. They've signed dozens of bilateral trade agreements that bypass the dollar entirely, particularly with oil-rich nations. The Chinese yuan is now being used in oil transactions between China and Russia, China and Iran, and even talks with Saudi Arabia suggest the yuan might soon be accepted for crude in the Gulf. That's not just economics, that's geopolitics. At the same time, China has launched the Petroyuan, a direct challenge to the petrodollar. It's backed by a gold convertible mechanism, which adds a layer of trust and stability that the dollar abandoned decades ago. And they're not doing this alone. The BRICS nations, Brazil, Russia, India, China, and South Africa, are all pushing for a multipolar financial world. One where the dollar is just one option, not the default. If this effort succeeds, the effects would be profound. First, global demand for dollars would shrink. The US no longer able to export inflation would have to live within its means, meaning higher taxes, spending cuts, or both. The massive deficits that once seemed sustainable thanks to dollar dominance would become a fiscal nightmare. The Treasury would have to offer higher yields to attract buyers, pushing interest rates up across the board, from mortgages to credit cards to business loans. Meanwhile, nations holding large dollar reserves could start dumping them. That's over $7 trillion potentially flooding back into the US economy. When that happens, the dollar weakens, and prices across the board start climbing. Not gradually, violently. And what about financial markets? They thrive on certainty. If the dollar loses its anchor role in global trade, volatility explodes. Investors might flee US assets, pushing down stock prices and undermining confidence in America's economic leadership. Retirement funds, pensions, and 401ks, especially those heavily invested in US bonds, could take a major hit. But it's not all doom and gloom if you're prepared. Investors who understand this shift early can reposition. Hard assets like gold, silver, and real estate tend to hold value when currencies get shaky. Diversifying into foreign assets, especially in countries less tied to the dollar, can provide protection. And keeping an eye on commodities, especially energy and agricultural stocks, may become a smart move as global trade reroutes through different currencies. The key takeaway is this: the petrodollar system isn't guaranteed to last forever, and if it breaks, the world will change fast. You can't stop the shift, but you can prepare for it. So, we've explored how the petrodollar system props up the dollar, why it's now under threat, and who's moving to replace it. If you found this eye-opening, don't keep it to yourself. Like this video, subscribe for more insights, and let me know in the comments. Do you think the US can hold on to the petrodollar advantage, or is a new era already here? Because one thing's for sure, the clock is ticking.